The stock market has shown the first signs of correction. Last week it declined by less than 1% because of a prolonged and unstoppable rally. Besides, investors factored in all the bullish factors. Apart from that, they are anticipating the Fed meeting scheduled for September 22nd. The regulator is expected to announce the tightening of monetary policy, namely the reduction of the QE program. Now it amounts to $120 billion a month. Let's move on to a more detailed analysis. The Dow Jones Industrial Average fell to 34,900 from 35,400 points last week. Analysts believe that it may decline to the levels of 35,100, 34,500 points. There will be no sharp downward movements. The correction will be smooth and steady. This opinion is shared by many market experts, taking into account the current situation. However, it will be possible to make a more accurate forecast for the index after the release of the U.S. Consumer Price Index. The report is on tap on Wednesday. Over the same period, the S&P500 index dipped to 4,460 from 4,540. It may extend its drop to 4,440 during this week. This will be quite an expected reaction of the market. Then the index is likely to decline further. The NASDAQ composite also showed weakness, tumbling to 15,450 from 15,650 last week. This is already a fairly significant decrease. In fact, the Fed's accommodative monetary policy has ensured a stable rally in the shares of companies included in the index this year. It also helped to attract a large return on investment from a number of companies. Yet now the situation is different. This is why the stock market as well as the NASDAQ index are projected to drop. However, a temporary corrective growth may occur. The index is likely to climb to about 15,500 and then it may decrease to 14,900 points. The sentiment in the stock market is generally bullish. On some exchanges, the number of rising shares for the week exceeded the number of shares that lost in value. For example, in the New York Stock Exchange, the number of stocks that climbed in price exceeded the number of those that closed in the red. The quotes of 132 shares practically did not change. On the NASDAQ Stock Exchange, the shares of 1,795 companies fell in price, 1,729 edged higher, and 163 remained at the level of the previous close. Among the largest U.S. companies, the shares of United Health Group Incorporated rose the most, notching an increase of 2.6%. The shares of ExxonMobil also jumped by 2.5%. As seen, the biggest gainers were the companies from the healthcare sector and those that produce and process oil products, after an increase in oil prices. Currently, these companies have the biggest growth potential. As for the outsiders, the shares of Danaher Corporation and Nike fell by 2.5% and 2.4% respectively. In general, the shares of companies in the oil and gas, finance, and telecommunication sectors are strengthening across the stock market. Utilities and manufacturing companies, on the contrary, incurred losses. To sum up, this week the U.S. inflation report for August is due. Inflation may remain high as it was in August, or it may show a decrease as it was in July. This data may also affect the results of the Fed's meeting, which is scheduled for next week. The regulator's monetary policy decision will determine the long-term trend for the stock market. You've watched Weekly Financial Review on Insta TV with me, Anna Kasatkina. Stay tuned.